Hey everybody, it's Pete. Welcome to today's episode of Stocks and Breakfast. It is Tuesday, May 26th, coming back from a long 3-day weekend, Memorial weekend. Hopefully everybody did the safe thing over the weekend. Obviously at this point with the country reopening, safe means safe means something different to a lot of people depending on what you believe about the pandemic. For me personally, I'm kind of being a little bit of a hermit right now. I want to hear a little bit better news about a vaccine. Thinking long term, playing the long game here. But it seems that a lot of people got out, had pool parties, and visited beaches and all that. And obviously, anybody can do whatever they want. But what does that mean for trading? What does that mean for the market right now? We are seeing a very big psychological level reached right now, which is S&P 500 futures getting over the 3,000 level. Which many consider that to be that if we get back above that level and hold, that means that we're now on the other side, and now we can start look for buying. So whether you're a day trader, swing trader, investor, that's a big number to keep an eye on the short-term horizon. Investors, longer term might not matter so much, but it poses an interesting question. I was thinking a lot about over the weekend is when is the right time to buy and when is the right time to sell? Relative to when you plan on holding the trade, because I see a lot in the comments when we discuss possible exit scenarios, possible trailing stop losses, and that kind of thing. It's very hard to give somebody individual comments about positions because you have no idea how long they're holding the trade. So that always has to be in the context of when they bought it and when they planned on selling it prior to putting on the position. So in other words, were they looking for a quick 5% gain? Were they looking to hold it for 5 days? Were they looking to hold it overnight, which is a very popular short-term strategy, buying on the close and selling on the open the next day? But you also have to take into consideration how far has the stock already gone. You know, in our coaching program, we use the terminology room to go. And room to go means if I look at that stock, is there any obvious reason, we'll use a buy as an example, is there any obvious reason to say that that stock does or does not have more potential profit on the table? And the obvious way to do that is to look to the left on a chart and see resistance in this case and say, well, it has plenty of room to go because all the way back on the left from 2019 in February, that's the last place that sellers did something significant, which, by the way, that is by far the easiest way to determine support and resistance levels. Just look to the left and say, where did buyers or sellers do something significant? Not once, not with 1,000 shares where you just see this print way up in the middle of nowhere. And you can even do the same with trading ranges. What's the actual price that prices are having a hard time getting through? We've done that in Netflix recently. We did it in Square. We could take a look at that chart in a minute, where it was just obvious that that was the place where sellers did something and have done something significant a few times. And despite the fact that the stock was still a buy, the odds of getting up and getting through that level for a new trade to be initiated were smaller. Which we saw in Square. It actually kind of stopped up in that level. We said maybe one more day at that point when we called it out. We got one more day, hit that level, and now we hit the pause button. Might open up above it today depending on where the market opens today, which obviously it looks like we're going to open higher. We're about three and a half hours, maybe just over 3 hours prior to the market opening now. The point I want to make here is there's a difference between room to go and whether you should buy now. And again, that's all relative to how long you plan on holding the trade. In my universe, which is that short-term window where it can hold something for a day, all the way up to, I say all the way up to, maybe 2 weeks. I feel like I have the most control over looking at a stock and saying, I can see in the way I look at things with order flow, I could see this stock going up for a couple of weeks based on what it normally does. And that's something that we have to consider right now in a lot of these stocks. I'm going to pull one up specifically that I think is a little bit long in the tooth at this point. And I don't think it's a good opportunity to buy at this particular moment. And that's doing something very simple, which is what does your stock normally do when it moves higher or lower? Specifically, most people are on the buy side. Most people look to buy stocks. A lot of people don't understand it. Quite frankly, don't want to short sell stocks. And I think that's a good, probably a good thing. If you don't understand it, you shouldn't be involved. Maybe the easier way to do it, if you think a stock is going down, is to buy puts. I don't know. Again, I don't know everybody's personal situation. But if you look to the left and your stock normally, again, we're not necessarily in normal conditions right now, but, and just to throw a couple of statistics out there, $16 trillion in debt has been pumped into the market in the last 3 months. That's 10 times the average or 10 times the normal. Let that sink in for a second. 10 times the amount of debt has been pumped into the market by the large institutions, by the Fed, to hold the market up to prevent the collapse, is what a lot of people are calling it. And did it do its job? 100%. But think about your own personal debt. You still have to pay it back. And eventually that money is going to have liquidity coming from somewhere, which is going to be profits, right? So if the economy is here and this way with unemployment, and stocks are this way right now, eventually the borrowing and paying it back through taxes has to happen at some point. That's really the point that I'm getting to. Am I calling for the market to reverse? No, I'm not necessarily calling for the market to reverse. Not now, anyway. Not in the short term, because you can't fight the Fed, especially in the short term, with trillions of dollars being pumped into the market as liquidity. But think about your local business. How many of those businesses that, if you've never been an entrepreneur, if you're not an entrepreneur, quite frankly, most small businesses, especially brick and mortar businesses, are operating on razor thin margins in good times. And the majority of the taxes that get paid are by small businesses, most of whom have been closed for the last couple of months. Maybe some restaurants have done curbside delivery and that kind of thing at much smaller capacity. That's going to come due. It's absolutely going to come due. So what I'm telling you is, you need to be hyper-focused, at least for the next year. Not that you always shouldn't be, but you need to be hyper-focused over the next year of paying attention to where you get into your positions, fully knowing prior to the trade how long you planned on being in the position. Because we're seeing a stimulus bounce right now off the lows from March, and we kind of are continuing to move to the upside, as again, right now the SPY, the S&P futures, the June contract is still over 3,000. It's funny to think about a Marvel movie. I love you, 3,000. But is now the time to get in, to buy new stocks? And personally, I'm saying no. That's really the point that I'm getting to right now. Right now is not the time to be putting on new positions unless your stocks have been trading sideways and have not partaken in the rally. But think about this. One of the biggest things that we do right now, and when I say have not partaken in the rally and you could possibly be looking to buy right now, that only means that you'll be able to measure your downside. That doesn't mean that they're going to be moving in that direction. The point that I want to make here is, from a relative strength and a relative weakness perspective, you absolutely need to know what your stocks normally do. And if your stock right now has gone 5 times what it normally does when it makes a bullish move to the upside, which again, for most stocks, let's just call, and I'm not talking from an investor perspective, I'm talking to active traders. That's the majority of people who send me emails and whatnot. If a stock normally over a 2-week period has a rally of, let's say, $10, just to throw a number out there, which I'm going to show you an example in a second. If it normally has a rally of $10 and over the last week, it's rallied 20, something's not going to continue. That's not normal. And eventually all markets get back to normal. Eventually the injection that the market got, which let's say, from mid-March to now it's almost the end of May, which is the better part of 6 weeks. Eventually that's going to settle in and we're going to have to get back to a real profit-driven market. So basically what I'm saying here, the right time to buy is when you obviously could manage your risk. in a way that's comfortable for yourself, whether that's a new day trade. Day trading is a completely different animal. I'm mostly talking about swing trading and maybe position trading from one earnings report to the next. Um, when you could manage your risk in a stock that has shown relative strength to the market, so in other words, or it's in sync with the market. So in other words, like a lot of the big stocks, which represent 20% of the S&P 500, Amazon, Microsoft, Apple, Facebook, and Google, all at or near or sprinting towards new highs, while the other 80% is not. So for example, if we took a look at Starbucks, Starbucks has been stuck in a trading range for the better part of 8 weeks, not rallying to all new time highs with the market. So from a trading perspective, Starbucks is relatively weak to the rest of the market. So what does that tell you for middle America? What does that tell you for the mom and pop stores down the block if Starbucks is not rallying with the rest of the market? It's an interesting thing to keep an eye on. So the point that I'm making here is, from a short-term perspective, if you have good positions that you consider trades and you bottom picked, for argument's sake, and I hate using that term, but that's what a lot of people did because nobody knew where we were going to bottom. But if you were lucky enough to bottom pick, or even if you started to get long after it was clear that you had a risk point, some stocks are getting pretty long in the tooth. Some stocks that normally don't move 100% in a 10-day window. It's not the greatest time in the world to initiate a new position. You need some kind of a pause. You need some kind of a pullback. You need some kind of a risk point where the odds of continuing in the direction that you're looking to trade are greater than the odds of profit taking coming in and you being the last one holding the bag. The way to do this especially is to take a look at price action and volume. And when you see an explosion in price action after a significant move, that's usually the smart money exiting those positions, especially when you combine it with a massive volume spike. So what I want to do now is I want to look at 3 charts just to give you something to think about. One is in the gaming industry. Obviously, we're going to take a look at Starbucks, and we're also going to take a look at the S&P, just so everybody can take a look and have a feel for where that is right now. So obviously, here's the line in the sand that everybody must draw today. This 3,000 sign is the level that everybody is looking at right now. Everybody feels that that's the place to get above. I do want to take a look very quickly at the Dow Jones Industrial Average. We're going to take a look on the daily chart, and we're going to take a look at the 200 period moving average, which is the level that everybody is watching. It's the long-term bullish or bearish line in the sand. And again, you can also take a quick look here. We're going to see very similar type price action in Starbucks in a second, where the Dow Jones is not participating in the rally. And again, I watched mostly the S&P 500 because it represents a bigger section of the economy. But again, does it really? If it's 20 stocks, 5 stocks control 20% of it, I guess that's up for debate, right? If we go to the SPY, taking a look at the same thing, we're kind of knocking at the door. Probably going to open above that. You can see the $300 level here right now. But here's the thing I want to point out. The NASDAQ has been stronger, which we've been calling out tech stocks for a while now. But when you think about the economy and you think about which stocks represent the blood and sweat and tears of the market and what the average person does, and again, maybe the average person doesn't buy Starbucks. The average person, like my parents, myself, we buy our own coffee. Starbucks is kind of more like a splurge. But a Starbucks, which is on every street corner everywhere, is not participating in the rally. What does that tell you about the rally? Next, we're going to take a look at a stock that's been traded quite a bit actively in our community inside the coaching program. Sorry, my coffee hasn't kicked in yet. My Starbucks, actually, it's regular blend. But when a stock rallies or doubles in price in 5 days, regardless of the news, pandemic ending, that's not normal. It's absolutely good news for the stock. But what does the stock normally do when we're in kind of normal conditions? Well, a normal move for this stock is $3. This stock has been having 10% moves in days, multiple gaps, has not closed below the open in 1, 2, 3, 4, 5, 6, 7 days in a row. And you have some pretty big resistance back here up in the $35 level. So it looks like right now it's trading just below 32. So am I saying get out of your stocks right now? I'm using this stock as this stock and Starbucks as an example of what to pay attention to from a day-to-day basis for which stocks to buy or sell, from a relative strength, relative weakness. So from relative weakness, Starbucks is not participating. Neither are the banks, quite honestly. They're actually in a downtrend. Probably going to open up higher today with the rest of the market. Go to Citigroup as well. But again, something like Penn, whichever stock you happen to be trading, if you're seeing these kind of moves where the stock's up over 100% in 5 or 6 days, that's not normal price action. And then you have to ask yourself, within the context of what the stock has normally just done, what are the odds of making a profitable trade now if you initiate a new position? Will you be the last person buying to somebody who has is looking to dump the stock right now for this short-term momentum, especially where even in good times, where the last earnings report, that price action is just above where we are right now. So you can see it's kind of getting back to where it was prior to the pandemic. So what is the upside on your money from a profit perspective, but then also what is your downside if profit taking comes back in? And within the next couple of months, people are a little bit less prone to be going out and standing in crowded casinos where everybody's breathing that same pumped in air. So something to consider. Like there's a little bit more than just the Fed is pumping the market up and it can't go down. There's a big disconnect between the market and the economy right now, and you're starting to see it here. So something to think about is that the number one thing is, where is the stock now? What does it normally do? And what are the odds of it continuing for you personally to make a profitable trade over whatever time frame you happen to be looking at? Now, if you're investing for the long term, very different animal. So stuff to think about right there. If you like these videos, absolutely click down and subscribe, and also leave me a comment if there's something that you want to discuss. I'll definitely pick it up on it in a future video. Have a great day, everybody.